Welcome to the Third Decade Podcast, where we believe every young adult deserves the confidence to take control of their financial future. Whether you're just getting started or you're well on your way towards financial independence, we're here to give you the tools and guidance you need to build a life that aligns with your dreams. Let's turn financial uncertainty into opportunity together.
Hey, Third Decade community. I'm your host, Nikita Wolf, and today I am joined by our volunteer financial mentor, Adam Van Deusen.
Hey, thanks for having me, Nikita.
Yes, thank you so much for joining us today. We're going to be using this time together to discuss ways to maximize benefits on your credit cards, make money on your credit cards, maybe dabble a little in travel hacking. We'll talk about the right audience for that, as well as maybe the wrong audience for that. But Adam, I would love to start by maybe talking a little bit more about what you do in your day job and maybe some of your excitement around this topic and why it matters to you personally.
Oh, sure. So I'm a CFP, a certified financial planner. Currently, I work for a company called Kitsis.com, which produces blog and educational material for financial advisors themselves. And of course, I'm also a third decade mentor, volunteer mentor, which I really enjoy. I've gotten into sort of the travel hacking credit cards hobby for at least 10 years or so, and have gotten to take a lot of really exciting and different kinds of trips and things that I might not have been able to otherwise. So it's definitely an interest of mine, and I really enjoy talking about it with others to help other people enjoy it as well.
Yeah, I'm really excited for our conversation today because while I have, done it to a very minimal degree, I still feel like a novice, and I think that I have some things to learn from you. So I'm excited to kind of blend both of our knowledge on the topic and maybe introduce some of our audience to something they might not be that familiar with yet. So, all right, I guess let's start by maybe identifying the right person for trying to make money on credit cards. Could you kind of outline what you'd be looking for to make that judgment call for yourself?
Yeah, so there's a lot of competition amongst the credit card companies for business. Basically anyone has probably gotten tons of letters in the mail and email offers and things like that because it happens to be a very profitable business for them. They make money in a lot of different ways, from the interchange fees that they make when you make a transaction to annual fees to interest that people pay if they don't pay off their bill in full. So to me, the primary audience for perhaps getting into this hobby is someone who has a good credit score already and therefore will be eligible for some of the better cards, whether you're looking to get cash back or travel rewards, which we'll talk about shortly. Someone who doesn't currently have any credit card debt, because if you're paying interest on your credit, not paying off your balance in full each month, then that interest is going to outweigh just about any benefit that you're going to get from the points. So you want to make sure that you don't have any current balances and, you're pretty disciplined and organized with your spending. And we'll talk about this as well, is that it can be tempting to spend more, in general with credit cards and perhaps with rewards, even more so. So I think having a disciplined approach to your finances and your spending is a good trait to have if you're going to get into this as well.
Yeah, that's a great point. So why don't we start from the very beginning, explain it like I'm five sort of situation. What do we mean when we say make money on your credit cards or travel hacking? Let's start from a real basic level.
Yeah, so the credit card companies, to entice people to apply for, and then once you've been approved for one of their cards, to actually use the card for your day-to-day spending, offer a wide variety of award types. I'll broadly categorize it into two different buckets. One is cash back, and the other is travel rewards. So some credit cards will offer you direct cash back. There are a couple, for example, that offer 2% back on every purchase that you have, which is very simple. You spend $100, you're going to get $2 cash back. The other type, and perhaps where there's more upside opportunity, is when it comes to travel rewards and points. So if you've been to the airport lately, you've almost seen the advertisements, whether it's in the airport or on the airplane itself, to get a credit card affiliated with one of the airlines. You'll also see it with hotels as well. There's big money in this for the hotels, for the credit card companies, and so they really try to promote these. And so with those, you can often earn the points affiliated with that hotel chain or the airline miles associated with those airlines. And these days, actually earning miles from spending money on the airlines is very difficult. It's much easier to earn those airline miles from the credit cards, which is perhaps a little ironic. Also in the points world, there are what you might call a transferable currency. So sometimes the banks issue their own credit card points. So for example, American Express has membership rewards points. Chase has ultimate rewards points. So those points can often be used for a variety of purposes, perhaps transferring them to a different travel partner. So for example, the Chase points, if you have the right card, you can transfer to United Airlines, Hyatt Hotels, and lots of other travel partners. Or sometimes you can redeem them when booking travel directly through the portals affiliated with the credit card companies. So that's sort of the high level view. So in two ways, it's thinking about whether you just want to keep things simple with cash back or whether you want to sort of dip your toes into earning travel rewards.
Yeah, and I guess I'd be curious because I do have a card that I intentionally got for travel hacking. But do you find that, for instance, like I think I've heard of like Southwest having a good credit card. Do you find it better to have an affiliated like with an airline credit card more often than not, or typically like unaffiliated to airline, but like just travel in general, and it kind of works cohesively with any sort of travel expenses you would incur with any airline?
Yeah, that's a good point. So it's going to depend on your individual situation because in addition to the ability to earn miles on that airline, many of these credit cards come with other benefits as well. So for example, many of the airlines' credit cards will come with a free checked bag or two, which if you're a frequent flyer on that airline and you check bags often, that could really add up in terms of the savings over time. Whereas if you never fly that airline, maybe it's not quite worth it. Other benefits, depending on the type of card you get, it could include things like lounge access for that airline when you're flying on them that day, and different other perks like that. So if you're loyal to a certain airline or hotel chain, whether because of your work or the airport that you're located near, those could potentially be worth it. Whereas I would say some of the transferable currencies or the bank issued currencies, those give you a little bit more flexibility if you're perhaps more agnostic towards different travel providers. So if I find a low fare on this airline or a low points redemption on this airline, I can transfer my miles to that airline, just the right amount that I need, and then make that award purchase there. So it's going to depend on your individual situation.
Okay. Yeah, that's really interesting. Could you maybe break down a little bit, like when they say that you get a certain cash back in, dining, or I think some credit cards even like rotate which cash back it is. How does that work for the average consumer?
Yeah, and this is where, your choice of credit cards is going to make a difference, and depending on your own spending habits. So for day-to-day spending, some cards will offer a flat amount of either points or dollars. So for example, those 2% cashback credit cards might say, no matter where you're making a purchase, you're going to get 2% back in cash. Where, as you mentioned, Nikita, some credit cards will have fixed categories. So you might find a credit card that offers 3% back on gas and groceries and 1% back on everything else you buy. So if groceries and gas make up a high percentage of your spending, that could be potentially a good card for you. And as you mentioned, some others offer rotating categories. So it might go by the quarter. So the first quarter of this year, maybe you get 5 travel points back on Amazon purchases and gas. And the second quarter is restaurants. Those can be lucrative. Earning 5 points per dollar spent can be really good, but it can also at the same time require a little bit more mental math of, if maybe you have a couple cards, should I use this one? Should I use that one? So one of the themes I think we'll talk about today is it's up to you as an individual to decide, how much effort you want to put into the hobby.
Yeah. I know a lot of these cards also kind of front load benefits. Like they have like a sign up bonus that is typically pretty generous. How would you recommend like maximizing those without maybe overspending? Like how would you make those decisions? Because I've heard of some people will literally open up like 3 cards at once. I'm sure there are some that open up even more than that. But how do you maximize the sign-up bonuses without overspending, essentially?
Yeah, so the quickest way to build up these credit card points are through what you said, the sign-up bonuses. So again, because of the competition among the credit card companies, they're really trying to get you to sign up and then hopefully become a loyal customer for them. So you might see an offer for 50,000 airline points, 75,000 transferable points. Typically, though, there's certain spending requirements, as you mentioned, to do it. So they might say, you can earn 60,000 miles on this airline after you spend $3,000 within the first 3 months of opening the card. And these numbers will vary. I've seen cards that you get the points after making a first purchase. Some that might say, 1,000 to 3,000 over 3 months. Some of the ultra premium cards might say $15,000 over 3 months. So the key here is as you're approaching these, and we'll talk about the impact on your credit score a little bit later, but the first step is to make sure you're only signing up for credit cards and sign-up bonuses that you're confident that you will be able to fulfill with your regular spending, and that you're going to be able to pay off those bills in full on time each month. Because again, if you end up paying interest or if you end up spending more than you might have otherwise, then the rewards that you get for it might not be worth it. So in general, it helps to sort of start very slowly so that you can ensure that you're going to be able to fulfill the spending requirement on time for the card.
Yeah, and I might even say as an aside here, if for instance, maybe you have a new hobby you're going to engage in and you already plan to be thinking, for instance, in my family, my husband wanted to get into mountain biking and we knew we were going to be buying a mountain bike in the next year. So we kind of waited until we knew that we would sort of coincide, like signing up for the credit card, knowing we had a minimum to hit and buying the bike with that afterwards. But again, spending we were already going to engage in, but maybe strategizing exactly when that happens to just like maximize it to your own benefit as much as possible.
Yeah, that's a great one. I've heard people do this with weddings as well. If some of your event, that's big money. So if you had some vendors that will accept a credit card, and that again, if you were just going to pay with it by check and you had the cash, this could be a way of getting a little bit back for all of that spending that's going out there.
Yeah, that's definitely one way to spend $3,000 in a month. As far as annual fees go, I know a lot of these cards with a lot of perks also sometimes come with an annual fee. Oftentimes it's justified by the benefits that it provides. But how would you suggest maybe to navigate like the retention game that the companies still are going to want to play, when to call it quits on a card if it's no longer serving you, just that situation generally?
Yeah, it's a good point. So, this year you sign up for that new airline card, let's say, you fulfilled the spending requirement, you got your 60 or 70,000 points. Sometimes the annual fee will be waived in the first year. Sometimes you have to pay it. Typically, the sign-up bonus will more than make up for that fee in the first year. But then in the second year, it comes due. Now an annual fee has hit. And depending on the type of credit card you have, could be anywhere from $95 to $695. Mm-hmm. And so it's at that point where you want to think about whether the benefits you're getting from the card are justifying the fee. So for example, we mentioned before, if you are loyal to that airline and you've made $300 back in bag fees that you didn't have to pay, or you enjoyed their lounges or the other benefits that you got from it, it could be well worth paying the $95 annual fee. But sometimes you might find it's like, well, the earning rate on the card isn't very good. Maybe it only earns 1 mile for all spending, whereas, you could earn 2 or 3 or more with other cards. So it's at that point where you can consider whether you want to keep it open or close. Before closing it, though, one thing I often do is call the credit card company and say, hey, I've enjoyed having this card, but the annual fee just hit and I'm not getting the value I might have otherwise. So I'm thinking about closing it. And by sort of threatening to close it, oftentimes they'll give you what's called a retention offer because they want to keep your business and keep you spending on the card. So they might come back to you and say, okay, well, we really want to keep your business. We'd like to offer you, let's say, 10,000 miles for spending $500 in the next 3 months, sort of a mini sign-up bonus. Usually they won't sort of cancel out the annual fee, but oftentimes they'll give you one of these offers that could more than make up for the value of the annual fee. So again, that's something to consider there. And another consideration, which I think we'll probably expand on again, has to do with your credit and the impact of opening and closing cards on your credit score, particularly if you have a major credit application coming up in the future.
Yeah. So what could you expect if you close out a card that has like a pretty generous, like I know a lot of, again, like the high end travel cards have high credit limits, and that's going to impact your utilization rate. So what could somebody expect to happen if they decide, you know what, it's actually not worth it for me to keep this card. I'm just going to close it out. I'm tired of the annual fee. They didn't maybe provide a good enough retention offer. What might happen to their credit score?
Yeah, so I guess we can think of it both on the opening side and on the closing side, because this is a key question and a key influence when thinking about working with credit cards. So I guess it might help to start with opening. So when you apply for a credit card, that counts as what's called a hard inquiry on your credit report for your credit score, which serves as a slight ding on your credit score. So for each application you put in, because when you apply for a credit card, the banks will check your credit score because they want to see whether you're a good credit risk, and then based on that and your income and other factors, how much of a credit limit they want to get to you. On the other hand, when you open a credit card, you're going to get a certain credit limit, say $5,000. That actually will help your credit score by increasing the total amount of credit available to you. Because a major part of your credit score is your debt to available credit. So what's your current credit card balances compared to the total available to you. So a little bit of a ding from the hard inquiry is also a little bit of a ding from lowering the total age or the average age of your credit, but a little bit of a benefit from expanding the amount of credit available to you. Now, the longer that you hold your card, that will now increase the average age of your credit, which is a smaller part, but a part of your credit score. So now, as you said, it's a year later, I'm thinking about closing the card. So if I do decide to close my card, that is now going to reduce the amount of total credit available to me. So, let's say I had 2 cards with $5,000 limits. So my total available credit is going to go from $10,000 to $5,000. So it's going to shrink that ratio of total balances to total available credit, which is one of the major parts of your credit score. That said, if you're keeping low or very little balances, and in the end, it might not make a huge difference there. So again, it's pluses and minuses of doing it, but it is important to be aware that it can have an impact on your credit score.
Yeah, and maybe just to be strategic in when you choose to maybe cancel a card, if you're going to do that, you wouldn't want to do that right before you're opening up a mortgage or right before you're going to finance a car. Especially like larger financed purchases, you want to make sure that your credit is in the healthiest place that it can be prior to doing that.
Yeah, exactly. And this goes for opening cards as well. If you're planning to, because of that, the little ding you're going to get from opening one, if you're, again, applying, as you said, a car, a house, a major loan, it's going to be much more valuable to you to have your credit score in a good place to qualify for the loan to get the best rate possible compared to the benefits that you're going to have from opening the credit card. So that's a great point.
Yeah. Could we spend a minute kind of talking about maybe some of the major preferred cards that you might hear of? I know I've heard of Chase Sapphire being a pretty strong one. There's the Amex Platinum. Then there's the Venture X from Capital One. Are there any of these that you want to maybe expand on or maybe speak to personally if you've had a good experience with them?
Yeah. So you mentioned a lot of the what we call the bank issued cards that give you benefits in their currencies. So you mentioned the Chase Sapphire series. So there's a Chase Sapphire, a Chase Sapphire Preferred, and a Chase Sapphire Reserve. So they basically go up the levels in terms of the annual fee, but also in the benefits that you get. If you're in that realm, having, for example, the Chase Sapphire Preferred or the Reserve allows you to transfer your points to those travel partners. And some of them can be very valuable. For example, Chase transfers to Hyatt. And oftentimes with Hyatt, you can get oftentimes people who do this will think about the cents per point of value that you're getting. Mm-hmm. So for example, let's say I find a Hyatt hotel room that costs 5,000 points, but normally costs $150. So $150 divided by 5,000 points would give you 3 cents per point of value, which is great because, again, we mentioned before that maybe a cash back card, you're getting 2 cents back. So getting 3 cents back here could be really valuable. Yeah. So having that transferable currency is good because you can find the best hotels and the best airlines to transfer to who might have the best deal at the moment for whatever city you're going to, or travel by airplane or where you're going to be staying. So the Chase universe is good. It transfers to United, Hyatt, Southwest, IHG, which is the Holiday Inn brand. Those are just some of the travel partners that they have. You mentioned American Express. So they issue membership rewards points. So at the high end is the Amex Platinum card. So this one is, I think it's still $695 a year as an annual fee, which is pretty steep. It often comes with a very large sign-up bonus. So the first year could be very good. I've seen it as high as 100,000 points and even higher, depending on what's on offer. Again, this offers you opportunities to transfer to different partners. And each program sometimes the partners will overlap, sometimes they're separate. So it just depends on who you want to transfer to. So for example, Amex is a transfer partner to Delta. They're affiliated with them and their cards. It'll transfer to Hilton, as well as many others, including a lot of international airlines, hotel brands, things like that. You mentioned Capital One as well. They have their Venture series of cards. And again, it's just going to range in terms of the benefits available to you, as well as the annual fee that you're going to pay. So if you're thinking about getting into this, it could be worth comparing the lineup within a certain issuer. So for example, let's say you use a lot of Chase's travel partners. You can decide whether it's worth it to you to get the Sapphire Preferred, which I think has a $95 or $99 annual fee, compared to the Reserve, which I think is $550. So it's just going to depend on your spending habits, the level of the luxury benefits that you use, and maybe the sign-up bonus that's offered right now.
Do you find that...
I'm sorry.
Oh, I was going to say, do you find that some of these luxury cards are easy to be approved for, or do they have certain limits that might exclude some people from being able to sign up with them?
Yeah, that's a great point. So oftentimes the ability to be approved for one of the higher end cards, oftentimes the banks themselves will require you to have a minimum credit limit. So for example, they might say for X card, you need to qualify for a $10,000 credit limit. So that's going to be a function of your credit score and especially your income. So you might find if you have a relatively modest income or lower credit score, you might not qualify for those. Whereas you might qualify for maybe either the mid-tier card or a base level, no annual fee type card. I should mention as well, and related to this discussion as well as our previous discussion on what happens when your annual fee hits, many credit card companies will let you sort of what we might call downgrade the card. So let's say you have a card that has a $100 annual fee that you're not using as much, or you're not going to pay, don't want to pay the fee, and they're not going to give you a retention offer. Oftentimes you can ask to downgrade the card. So for example, airlines often have premium level cards and sort of fee based cards that have no annual fee. So by doing that, that doesn't involve a separate credit pull. So you're able to keep that credit line open without now having to pay the fee. You're just the new card you get might not have the same level of benefits as the other one, but that can be a good way to not have to have the reduction in your credit limit while maintaining your points as well.
Yeah, I think that's probably a really good option for a lot of people that find themselves kind of in that loop of, I have the annual fee, maybe I've maxed out the benefits, or my spending doesn't really warrant this anymore. Downgrading a card seems like a great alternative to being able to keep your credit in a stable place and be able to nix that annual fee.
Yeah, and I should mention too, before you close a card, be sure to know whether you're going to be able to keep your points or not. So typically, if the card is affiliated with a specific airline or hotel, usually if you close the card, you'll keep your points because they're in your hotel's frequent member account or your airline's frequent flyer account. It's those transferable bank-owned points. So if I have Amex points, for example, and I totally close my Amex card and I don't have any other ones, then oftentimes the points will be forfeited. So if you are going to close the card, either perhaps downgrade it to where you can keep the points or transfer those points to one of those air travel partners that you use before closing it so you won't have them forfeited.
Yeah, that's a great aside. Could we shift really quick and maybe talk about how you could combine the credit card rewards that come with these cards with travel deals and really truly gamify your traveling in the coming year, however long?
Yeah. So when it comes to the different travel programs, each one works differently. So, for example, let's take some of the airlines. So nowadays, oftentimes the airlines will make their points worth not necessarily a set value, but they'll make the point cost of a flight relative to or in relation to the dollars on it that it would cost normally. So, for example, they might make it so you can get 1.5 cents of value per mile that you have. But that can offer opportunities. So, for example, if the airline is having a flight sale, maybe on a route that you're interested in, you might find that that your points go a little bit further than they might otherwise. It can also be helpful to compare to different airlines. So, for example, if you have points that transfer to multiple airlines, maybe, and this works especially for international flights, maybe airline A, this flight might cost 40,000 points, but airline B, it costs 30,000 points. And if you have the option to transfer to either of those airlines, you can get yourself a better deal that way. So it goes very similar with hotels as well. Different, each hotel will often have a very separate points price. So you can often find good deals based on, the convertibility of the points to that hotel and the deals that they're offering at the time.
I've also heard that with flights in particular, some of these credit card companies will actually match, if there's a better offer. For instance, I'll speak to Capital One because that's who I have one of these credit cards with. If I am not able to find a flight cheaper with them than I could through, let's say, Google Flights, and I call them and I tell them that, they will actually match that. And that way I can still get the points as if I'm booking through the travel portal on Capital One's website, but I get the benefit of the cheaper flight. Do you find that that's typical, or is that not so much?
Yeah, and so that gets back to the point that when you're redeeming for travel, there's often two ways to do it. There's transferring your points to the actual provider. So I transfer to United and then buy it with my flight with United points. Or a lot of the portals will let you book the travel directly through their website and use your points to book that travel. So yeah, where you're mentioning it there, oftentimes these travel portals are all trying to compete with each other. So you're right that they might offer you, say, hey, if you find this cheaper elsewhere, we'll let you book it for that price on our portal, whether it's in dollars or points. So yeah, that's a good point to do a little comparison shopping there.
And what are some resources you might point our audience to as far as maybe finding deals and maximizing their redemption benefits? I think you had mentioned Skycanner and PointsYeah. I would love if you would talk about those two in particular.
Yeah, sure. So, when you're searching for flights with cash, let's say, there's a lot of aggregators that come up with similar results. So Google Flights is actually quite good. Skyscanner, I really like. That one's really good for international flights and international airlines. So that's a nice one, just to get an idea of what the cash price you would pay for a certain flight would be. But then you can go and compare your points. So, if you have all your points with one airline, for example, you might search on their website and see what's available. But there are also now several aggregators that actually do the searching on different airlines for you. So, for example, there's one called PointsYeah, which what you can do is you can tell them, hey, these are the kind of points that I have. So maybe I have Capital One points or American points, or maybe I just have United points. And they will then search across all sorts of airlines to find the best points deal for the flights that you're looking for and the time that you're looking to fly. So, they might say, okay, you could transfer your points to this airline and it'll cost you $40,000 and this flight is at this time. Or you can transfer your points to this airline and it's going to be 50,000 points, but maybe it's a nonstop compared to a one-stop flight. So it's a nice way to ballpark of the deal that you're getting, but also comparing the points price that you get to the cash price that might be available to you. Because maybe if you just book it directly or book it through the bank's travel portal, sometimes you'll get a better deal from that than you will from transferring points. It just depends on the specific route that you're flying in. And in general, the more flexible you can be in terms of the specific days that you're flying or specific airports that you're leaving from or travel providers that you're using, that kind of flexibility can often help you get better deals as well.
Yeah, that sounds like a great resource and one that I definitely plan to check out the next time I'm thinking about traveling. So thank you for sharing about that. So what are some of the benefits that entice people aside from like the percent cash back, the points earned on travel? What are maybe some of the extra frills that come with these, premium cards?
Yeah, so I've mentioned a couple of them. Some of them will give you lounge access. So if you're flying on that airline that day, you can access that lounge. Or some the banks have their own lounges. Capital One has their own lounges, and Amex and others in certain airports that, depending on which card you have, you might be able to access that. There are also some travel-related benefits. So some will offer lost luggage insurance or trip delay insurance. So paying for any fees or costs that you have related to a trip delay. Some of them, again, will offer free baggage. That's another one. A popular one as well is car rental insurance. So depending on the card, some, when you go to a car rental company, they'll say, hey, do you want our collision damage waiver? We'll, $15 a day. We'll cover if something damage hits the car. So, because otherwise you'll just have to use your insurance. And if you use your insurance, the potential, if it was your fault, of course, to have the rate go up in the future.
Yeah.
So, but instead, this can be a savings because often some of the, especially premium cards, will offer primary collision damage waiver, the insurance there. So you can decline the waiver and not have to pay the fee with the car rental company. And your credit card then will cover that in case. And with premium cards, we'll cover it as the primary insurer, meaning that they'll cover it first before you file a claim with your own insurance, which can be helpful. So if it's you rent cars a lot, that could be an attractive benefit of having some cards. So there's a long list of them. Some will offer travel rebates. So the first $200 you spend in travel each year, they'll rebate you. Some cards offer free credits on Uber. It really varies by the card. So it can pay to do just a little bit of research to find the card that fits your travel lifestyle the best and perhaps offers the sign-up bonus that's most attractive to you.
Yeah, I know one that stood out to me when signing up for Capital One's Venture X card was the TSA pre-check or global entry. I believe that the global entry was just like a cost reduction for it, but it was a really valuable offer. And being able to, cut the line at the airport is certainly a benefit. I think a lot of people would enjoy. So that's another one that I've heard too.
Yeah, that's great. Pre-check's a good benefit, and yes, you're right. Some of them pay the whole, I think it's $100 fee, and that's good for several years, which is great.
So how would you suggest maybe monitoring your points, making sure you don't lose or like that the points don't expire at some point, and just generally managing this to make sure you don't get in over your head? Because I know some of this can feel overwhelming, especially if you're like you dive head first and really submerge yourself in this world.
Yeah, I mean, my advice is always to start slowly when it comes to it. So finding perhaps one card that has a nice combination of a sign-up bonus with a lot of the benefits that you're interested in, and perhaps a card you're going to be willing to keep for the longer term. So just to get your feet wet, to get used to spending enough to get the sign-up bonus, seeing what the benefits are like on a regular basis, and keeping your points within one ecosystem to start, whether it's using an airline that you frequently use or one of the transferable currencies. So that's a good way to get started, because as you get more cards and have more programs, as you said, it's going to be tougher and tougher to keep up with all of them. So a few different things. So there are a couple tools out there that will sort of act as like a wallet for your points that'll show you all the different points that you have. And sometimes will alert you, for example, when they expire. Although increasingly a lot of the companies are having sort of non-expiring points, which is nice, but it's still worth checking out in that way. So that's helpful there. But a big piece of this is making sure that you're able to track all of your credit cards and all of your payments. Because again, if you have a late payment because you have all these cards and you forgot to make the payment, that's going to hurt your credit score. The late payment, you might start owing interest, paying late fees, things like that, again, which might negate a significant portion of the benefits that you're getting. So whether it's just setting up auto pay for all of your cards, with most cards, you can change the due date each month. Maybe you put the due date all on the same date so you get the statement at the same time and just pay them all off at once. But you really do want to make sure that you're organized in terms of knowing, how many cards you have, when the annual payments are coming, and when your monthly payments are due. Because again, you don't want to do anything that's going to threaten your credit score or result in some sort of additional financial outlay that you have to make just for the purpose of points.
And I might ask kind of a side question really quick. Let's say you're working with a 30-year-old participant of our program and they're asking you, I don't have, or maybe they've had one credit card for a long time. What would you say is like almost like the sweet spot for the number of cards to hold before maybe it starts feeling overwhelming to some people, or maybe the benefits start diminishing? Yeah,
it's going to depend on sort of your individual tolerance. And I'll give a good example. So, I've been into this hobby for more than 10 years. I have a spreadsheet, where I track the cards and the due dates and how long I've had it and the credit limit and all like that. So, I've been willing to go up to having, say, more than several credit cards at one time. Whereas my wife, for example, she's not interested in doing sort of that tracking and keeping up with the monthly payments. So, she never has more than maybe 2 cards at a time or 3 cards at a time, being strategic. And this is a hobby that can be very good if you have a spouse or a partner, because you can each earn the benefits and really cash in, especially when it comes to hotels. So it's up to your own tolerance. And so, I would say any more than, 2 or 3 cards, that's probably where you're getting into the, okay, I need to be organized range, because I probably have points in different providers. I'm having, multiple bills due and statements coming in each month. But again, take it slowly, do it one at a time, see how it feels. And then, after you've done your sign up bonus and you feel ready for another card and you think you can handle it, maybe then considering applying for a new one.
So just kind of like a slow start. Don't go open up all 3 new cards for yourself in the same week.
That's right. And it can be it can be so tempting, when you see, you're eligible for a 50,000, 75,000, 100,000 bonus. We mentioned, a 50,000 point bonus. Let's say you value those points at a cent and a half each. That's $750 for, just doing spending that you would do anyway, which is great. And it could be worth even more. When we talk about redemptions, oftentimes the best value you get is from luxury redemption. So redeeming for a business class seat or a really nice hotel, things you might not spend on cash anyway. It's a really great way to experience that.
Yeah, totally. So what tips would you provide for basically when to redeem your points versus when to sit tight and kind of let them accrue?
Yeah, so there's a couple ways to think about this. Just like there's inflation with dollars in the sense that, something today costs a lot more than it cost 20 years ago. The same thing happens in the points world. So, sometimes it's every year, sometimes it's every couple of years. The airlines and hotels will increase the cost of their redemptions as the cash prices are going up as well. So especially when it comes to those airline miles or the hotel points, it typically doesn't pay to just hoard them because their value is going to go down slowly over time. That's somewhat less of a concern if you have the transferable points because you're not tied to a specific airline, but in general the cost will go up. So just hoarding points for keeping them and staring at this stash that you have generally doesn't pay off. That said, it might take a little bit of time to earn the number of points that you need for a specific trip. Oftentimes a good strategy is if you have a specific trip in mind is to work backwards from there. So, let's say I'm going to go on this trip to California with some friends from out of town. So, I'm going to look to see, hey, which airline is going to have the best deal on the flight that I'm looking for. Okay, so maybe I can get the round trip flight for 25,000 miles on Southwest. So now if I look at that card, Southwest offers let's say a $50,000 point card. Well, great. That's going to cover this 25,000 point trip. And I can sort of plan in advance for that. Now the number of points, it might change over time, but that should be covered there. Similarly with a hotel, maybe if you're doing a trip with a flight and a hotel, you say, hey, here's the hotel that I want. That's going to cost me 25,000 points. Here's the flight that I want on this airline. That costs me 25,000 points. And both of those are transfer partners of Chase or American Express or Capital One. Well, now maybe I get the sign-up bonus on the Chase card with a $50,000 or 50,000 point bonus. And now that once I do the sign-up bonus, it's going to take, maybe a couple of months to do the spending. And then it can often take up to a month to get credited those points. But at that point, then I can cash those points in for the specific travel that I wanted. So there's a little bit of estimating involved and a little bit of advanced planning, but that can be a great way to make sure that you're applying for the cards that are most appropriate to the travel that you expect coming up.
Yeah, I like I said at the beginning, I'm already learning so much from this conversation. So I appreciate you kind of going through different ways to use this to your benefit. What different paths would you suggest for people who maybe either want to dip their toes in or just want to go deeper into this? Maybe resources you'd point them to, that kind of thing.
Yeah, I think the first step is to sort of understand, your personal financial situation and what you might qualify for. So, for example, if you check your credit report and check your credit score to see where you're at. So, for example, if your credit score, you're above 780 or 800, that's probably going to put you in good position to be able to qualify for a wider variety of cards. Whereas if your credit score is a bit lower, you may only qualify for some of sort of the standard cards, let's say. Not dissing these cards or anything like that, but the different level of cards where maybe you're getting cash back without some of the ultra premium benefits. But again, many of those cards are fee-free too, which is nice. So thinking about that range, that can help sort of guide you into which card you want. Now, if you've never had a credit card before, one of the factors that goes into your credit score is the age of your oldest credit account. So if you've never had a credit card before, a good strategy can be to open up a no annual fee card, maybe a no annual fee card that offers a nice cash back benefit. Because that way, you're going to be able to keep this card forever because you're not paying any annual fee on it. And maybe it can serve as sort of your base spending card when you're not spending in a bonus category or working on a sign-up bonus. You use this card, maybe you're getting a cent and a half or 1 to 2 cents, let's say, of cash back. That can be a good place to start. But let's say maybe you already have one of those cards. Maybe you opened it 5 years ago. That's serving as your base card. So now, again, think about what you have in terms of your credit score, and think about it's hard to judge, but it's going to depend on your income and the amount of credit a credit card company is going to issue to you. So maybe if you have one card with a relatively low limit, but a pretty good income, you probably have some room there that the credit card issuers are going to be willing to extend credit your way. And this can vary by issuer too, because, Chase knows how much credit they've issued to you, but they don't know, it's not going to be based on they'll see your total limit from your credit report, but they don't know how much Amex has issued to you or Capital One has issued to you. They want to know how much risk are they taking by issuing you credit in that way. So it's going to depend in that way. And again, then find the card that meets your travel needs. Again, whether you're loyal to a hotel or airline program, if you're very loyal, maybe looking to one of those, but otherwise maybe looking to one of those transferable point programs as sort of a general spender, because you could have sort of two powerful cards there. You get the one where you earn the sign up bonus on, use that for your travel rewards, do spending in the categories that earn more than 1 or 2 cents on it, and then use your cash back card for all of your other purchases. That could potentially be a good combination there.
Yeah, I know we've spent much of this episode talking about more travel focused credit cards, but I, like you just kind of mentioned, definitely don't want to skip over the benefits of just having a cashback card. I know that's where I started probably 5 years ago now at this point, and it is genuinely really beneficial on that card alone. Only, again, because we're paying it off every month. You never want to be trying to strategize to gain points on something you're paying interest on, because it's just going to negate that benefit. But just a card that I was using for my daily spending, putting everything on, but knowing that my income can easily pay it off in full mid-month or at the end of the month. I would make a few $100s a year just on those cashback points without even thinking about it. I just was using it like a debit card. And that's, I think, a good way to start if, again, you're already absolutely confident that you're living within your means and that it's going to be no issue to pay off those cards in full and avoid interest payments.
Yeah, and that's a really great point. And if you just want to keep things simple, earn that cash back, but treat that as your travel fund. Yeah. Because if you use that for travel, you have the whole universe of, you don't have to worry about transfer partners and things like that. It's just, I can go to Google Flights or Skyscanner, find the best and cheapest flight that I want. Go to all the hotel programs, find the exact hotel that's right for you. And you could potentially treat that cash back that you've gotten as the rewards to do that over time and not have to, spend otherwise.
Yeah, definitely. Are there any other resources you might point our listeners to on this topic?
Yeah, so there is a very large ecosystem of blogs and podcasts when it comes to credit cards and travel hacking and sort of putting those together. One of my favorites is called The Frequent Miler. They have a blog as well as a podcast and a Facebook group as well. I really like it. It's good for everyone from people just getting into the hobby to some of the most advanced people out there. They do a good job of talking about a lot of the issues. I mentioned today, what's the best credit card to open if you're doing this? They'll highlight specials. This card sometimes has a $50,000 bonus, but now it has a 50,000 point bonus, but now it has a 75,000 point bonus. They also have a great resource on their website that shows the best available offers in their opinion at the moment on credit cards. And one thing I would note when you're looking at these blogs or the podcasts, the way they typically make money, the primary way, are through affiliate links. So oftentimes they'll put a link in their blog post or in their show notes that if you click through it to apply for the card, they'll get a commission from the credit card company itself. Now, you don't have to pay this at all. You get the same bonus that's out there, but so they have an incentive to have you apply through them. One thing I really like about Frequent Miler is on their best offers page, they show the best offers no matter what, whether it's an affiliate link for them or if it isn't. And they'll be clear if it is an affiliate link. So I find them to be not only a useful source of information, but also a very objective one as well. So that's one of my favorites, but there's a wide variety of blogs who can help you find your next travel destination, your best point redemption out there. It's definitely a pretty deep rabbit hole you can go down if you're interested.
Yeah, it is. I really appreciate you coming on to today's episode and kind of helping introduce this topic or maybe expand a little bit on people who have just started dabbling in it. Anything that we've talked about, we will link in the resources on this episode. So please be sure to check that out. Thank you again, Adam, for spending your time with me today. And I'm excited to talk about more on credit in our next episode. So thank you for being with us.
Terrific. Thanks so much for having me.
Thank you for joining us on the Third Decade Podcast. Remember, building your financial future isn't just about dollars and cents. It's about empowering yourself to live the life you want. If today's episode gave you new insights or inspired you to take action, we'd love for you to share it with someone who could benefit. Together, we can turn financial uncertainty into opportunity. Until next time, let's continue to embrace the journey ahead and take control of your financial future.